All right, July 29th market recap for the day. I ended up taking no trades today, going to be going over my thought process throughout the entire AM session until I got off. So let me just get straight into it. So today is FOMC day and high time frame. We really just have been kind of in this really choppy range. We had DOLs below on both indexes and DOLs higher on both indexes, right? So really just a day where I'm looking to find a condition within that internal range between both the buy side and the sell side. And a day that I really just want to see a really clean setup, good close on my IFEG, because already I'm not extremely confident in a trade that might be later in the AM session. So today, immediately thinking, okay, since it is FOMC and we have been moving very slowly this week, and especially with the pre-market conditions, us being really kind of neutral and having no clear direction to trade to, kind of just de-risking on the day, right? So that's what you want to do in these type of days where price just isn't clear and there is a big news event later this afternoon. You kind of just want to wait and see what happens during the market. And if nothing's clean, you just kind of get off for the day, sit on your hands, and go next day. So that was my initial thought coming in today. So of course we have the sell side below and we have the buy side above. And if you mark out the range between these two, we are sitting around EQ, I believe. Yeah, we're wicking the EQ of this range about 3 times. So I was neutral, leaning a little bit bullish because of the fact that high time frame, what have we done, right? Well, we're trading still inside of this monthly fair value gap that we ended up hitting, I believe, yesterday. So we end up hitting this monthly and we're starting to wick outside of it. So I'm already thinking, okay, price should be a little bit bullish from this point. So I do want to try and catch longs today. Now going down to the lower time frames, what do we have? Well, on ES, we have this 30-minute gap right here. You can see we have this 30-minute gap. And on NQ, we have this intermediate high right here, this 30-minute intermediate high. Let me just mark this out properly. So we have this intermediate high, and this is going to be my condition, right? So I want to see price open up, sweep out this 30-minute intermediate high, and on ES, I want to see price open up and mitigate this 30-minute gap. And then from there, it's going to show me which direction price wants to move into, because that's what we do when there's low resistance on both sides of the range. Use an internal condition around EQ of the range, and in this scenario, this is exactly at EQ, so that's pretty cool to determine where price is going, right? You wait for it to be tapped and then you wait to see the reaction of price and then you trade in that direction. So now let's get to open. That's the story. I'm kind of just waiting for the indexes to tap their conditions and then just trade off of that. Now, what do we see at open? Well, at open, we see NQ print this 930 wick above and sweep out that 30-minute intermediate high. And then we see ES do the opposite, print no wick higher and just close absolutely lower. It does not hit that 30-minute gap, so I was not looking for shorts until we end up hitting that 30-minute gap on ES. I can just play out PA here. What does 930 do? Well, 930 pretty much just generates this low, right? It's not really manipulating anything significant. We just kind of have all this liquidity down here, not really manipulating anything significant. On the hourly on NQ, we do have this hourly intermediate low right here that we just kind of end up generating more high time frame low resistance towards. Now we come up, we sweep out this 930 wick again, and then we start to move back down, right? And I'm not looking for a trade at this point because ES is not in any kind of 5-minute gap or 15-minute gap, so we do not have that true manipulation needed for me to take a trade, especially on a day like this. I really want to be picky with my rules and use a lot less discretion in my trades because I just was not confident, especially when we're sitting in a really neutral range like this. So we end up opening higher. We do get this V-shape inversion after taking out the 930 wick and resweeping this 30-minute intermediate high, but is invalid for my model personally because yes, what has it done? Well, all it's done is just edge the 9, oh, not edge the 930, what am I talking about? All it has done is just print more low resistance at your stop loss. So on ES, what do you have? Well, price has a reason to come up and manipulate your stop loss because ES has an unmitigated 30-minute and low resistance liquidity leading up towards it. So a very low resistance stop loss if you did take this 1-minute short here. I believe it was a 2-minute. Yes, it was a 2-minute. So very low resistance stop loss. That's something you want to look for. You want your stop loss to be high resistance and low probability for price to return back towards it. Now, what do we do after this? We kind of just chop around. We have our 945 open. 945 open does what? Well, it manipulates into these 1-minute gaps. And then we really just start seeing price be bearish, right? And how can we tell that price is just going to be bearish towards these DOLs lower? We can tell this because what is 945 done? Well, 945 has opened and tapped this 1-minute gap right here. this more premium 1 minute gap of the AM range. See, we tap it, we print this reaction wick, and now this 1 minute gap is going to be beating our hourly gap down here. So 1 minute gap beats a high time frame hourly gap. That's when you start to really see prices going to be bearish. That's when you start to flip your bias. So at this point, I was really just thinking, okay, from here, we're probably going to be bearish. So I want to just kind of wait and see if I get some sort of continuation opportunity down, because what am I seeing? Well, I'm seeing price leave this range on both indexes and starting to show true direction down towards this monthly intermediate low. So immediately I'm thinking, okay, this is my draw on liquidity, this line right here. Going up to the 4 hour, you can see that it is this significant low. It's this monthly intermediate low. And we also have this other previous day low leading to, or I believe the low of day leading towards it. So we have major sell side below and prices showing obvious direction after manipulating this 30-minute gap. 9:45 opens up and just really shows that we're extremely bearish. So I was bearish at this point, looking to get a trade to those DOLs lower. What do we do from here? Well, we kind of just come back up a little bit inside of this 5-minute gap. But at this point, this 5-minute gap was unsponsored. There was a smaller sponsored 5-minute gap here. But since we were so close to these DOLs, I was somewhat willing to take a trade if we immediately flipped this 2-minute gap down here. If we did flip this 2-minute gap immediately, I was thinking, okay, like we're so close to these DOLs down below. These are such a significant magnet for price that I don't really see a world that if we end up inversing this 2-minute with speed and a very healthy close in our IFVG, that we do not hit these DOLs. They're pretty much a guaranteed take profit if we flip that 2-minute. And if I stay on the 2-minute, you can see that we just take too long to inverse this gap, and it's not what I want to see at all. You see we print a wick right there, and then we end up closing and we take out this swing low, meaning that this close is invalid because we swept out buy side before closing on the 2-minute. So at this point, what does ES look like? Well, ES on the high time frame has pretty much just taken out absolutely every single sell side draw. You can see right here, we had all this built up sell side from the past like 5 days or whatever, 4 or 5 days, and ES just takes it out right here. We don't really get an entry down towards anything, and at this point, I really wasn't confident in anything. What do we see on both indexes? Well, we see both indexes open up this 15-minute gap above right here. We have this 15-minute gap on NQ. And then on ES, we have that exact same 15-minute gap right here. Let me zoom in. You see the 15-minute gap. And yes, you could kind of think of this as a MEC model, right? So the MEC model is when the indexes sweep out all the liquidity in one direction, and then they have to return to an internal fair value gap, high time frame fair value gap, to then decide. So you're pretty much returning back to this condition and using this 15-minute as like the condition of price, right? So it's pretty much like an agreed upon draw on liquidity. What do we see? Well, we see price just run lower. And at this point, it's getting late in the session. It's around 10:30. It is 10:30. And there is this possible 5-minute inversion here that I was looking at, but I was like, no, it's very late in session. We have FOMC later. We've already expanded about how many points since open, right? We've expanded around 450 points since open. We're very just bearish on the day. And from here, I don't really see any high probability longs, because what do we do after we distribute? Well, price moves in AMD formation. So we should just start to reaccumulate and then move nowhere, right? So this is where I got off for the day around here. No trades for me today. Really hoping that price clears up after FOMC, because it has been very rough this week. We just keep on moving in one direction. No retraces, no entries for anybody. So yeah, that is the day today. If you want to, free Discord, link in description. I'm very active in there. And yeah, thank you.